Hi everybody, so we're in the client engagement session together with Shlomi Ogad from Facebook, Nir Shapira from Telemessage, Harel Falk from Solitics, and Omer Hevlin from BD Strategy Partners. So you with me everybody?
Hello.
Yes. Hello everyone.
Hey everybody, how are you?
Fantastic. How are you?
Thanks for joining us. We're going to start talk about client engagement. We have a very interesting agenda going from one session to another. So welcome to this client engagement session. We often talk about user engagement and client engagement in terms of customer service, meaning after the user became a customer. But, Shlomi, when we spoke in our preliminary call, we talked about another case of user engagement, which is before the purchase. Maybe you can elaborate a bit about your take on that. Tell our audience, how do you see that?
Sure. So with pleasure. First, maybe a few words, really very quick words about what am I doing in my day job. So with Facebook, and we work with the most disruptive, the most interesting fintech companies that there are in Israel on their growth strategies. So this is actually a case or an area that I tend to deal with quite a lot. And I do believe the topic of the customer engagement before the purchase, before the user becomes your customer, is a topic that is somewhat overlooked. Now, I'd like to start with the bottom line, or with the why. Why companies should do this? Simple question. First, it's to boost the lead or registrations quality. And second is to reduce the acquisition costs. And how? First, what is the problem? So when we have complex financial products, unlike e-commerce or simple products, we always have the risk of having a poor lead quality. So especially when you remember that I am coming from Facebook and it's a discovery channel that people are being exposed to products for the first time. For instance, users might not fully understand what they are signing for, or they might think it's for businesses and they are private persons. On the other hand, those users might not be the users that you are looking for, that the company is looking for, because of several reasons like I gave before. Now, most of the acquisition funnels that I've seen are built for demand harvesting. They're built for users that know exactly what they want. They come to or for simple products, think about, again, e-commerce. They come to your website and they buy it and purchase it. In reality, it's not always the case, especially with fintech companies, because in many cases, users have misperception of the service. And in other cases, they might not be the type of users that the company is looking for. The solution, in a nutshell, because I'd like to give my colleagues a chance to speak as well. So the solution is to engage your potential customers before they sign or register or leave their details. In this way, you can actually achieve two. First is to demonstrate your service to the users so they can assess if there is a good fit. And second, you can learn more on the potential customer. And what you do with this data is you factor this data into a predictive LTV model, LTV calculation. And this way, again, very, very simplistic, very in a nutshell, but in this way, you can focus on the more promising users. So engaging them before, better, making sure that they are better understand your product. And on the other hand, learning more about them so you can target the more promising clients.
Thanks for that, Shlomi. And Gil, moving to you, maybe you tell our audience a bit about yourself and what you're doing for Telemessage, and how do you see communication trends in regulated corporations? This will be interesting to understand from your point of view.
Okay, so first, I'm Nir Shapira. I'm the VP of Business Development at Telemessage. We enable regulated firms to allow their regulated employees to use like the mobile channels to do WhatsApp, WeChat, SMS calls in a compliant manner. And what we saw is that this was a very different year for most firms. Suddenly, one day, all their trading floor or call center had to go home, and they didn't really have a solution for them. They suddenly had to use whatever they have at home to be in touch with customers or channels, and we're talking about traders, wealth managers, private bankers. So we saw a huge uptick in usage of mobile in all forms, SMS, MMS, calls, and we saw that on average there was a factor of times 3 to 5 times more mobile calls, about 2 or times 7 SMS traffic, and of course it depends on geography. And actually, in the case of WhatsApp usage, Facebook reported that WhatsApp usage increased by 40%, but in regulated industries, we saw that it increased by 100%, 180%, meaning that any firm that had a way to communicate over chat or WhatsApp and allow their employees to use like WhatsApp desktop, WhatsApp on the mobile from home, it became the preferred channel for this communication. And of course, all these firms.
Sorry for interrupting you a little bit, but in that case, what's the financial regulator approach dealing with these new communication channels? How did they took it?
Yeah, so again, the regulators at first, the most important thing for them was to allow the market and the financial market to keep on going. So the trading needs to continue. The firms must be in touch with their customers. So the first phase, they just wanted to ease on regulation. Told them, we understand that all your traders and contact centers and bankers are suddenly at home. You don't maybe have to comply with all regulations. First of all, make them work. Make the financial industry keep on rolling. Then after a while, when they understood that this is ongoing, so they reminded all these regulated entities, guys, your employees are working from home, but you need to still monitor them, record all the conversation, record all the chat, you're receiving and making transactions. At the beginning, they even told bankers to take it on paper notes, just to keep copies and proof of all these transactions. Because this COVID prolonged, so after a while, they started telling the bankers, hey, you need to find a way to really record and surveil all the mobile communication. And a few months later, the SEC issued its first fine related to text messaging, just because text messaging. FINRA, again, the Financial Industry Regulation Authority in the US, expelled the trader. The FCA in the UK issued specific notice telling firms that they caught firms and employees using WhatsApp. They fined a few firms and they told all other firms that, hey, you must monitor WhatsApp use of your regulated employees. And similar trends also happened by the Hong Kong Monetary Authority. There it's more WeChat and WhatsApp. So they again clarified that these need to be recorded. And many other regulators like in Australia, India, and others, main thing is record and surveil the mobile communication of your employees. If they're working from home, treat it as if they're at work.
So both for employees and clients, we see that there is a common communication in the day-to-day channels that everybody are used to interact with. And maybe it's a good question also for Harel. Harel, you work for Solitics. Maybe tell us a bit about your solution, and then we'll dive into client engagement and the ways you improve it.
So first of all, it's great to be here. Thank you. So yeah, I work for Solitics. I head up all the business development and sales of the company. In order to understand the solution and the value that we bring to our customers, let's just for a second step back and understand the problem and where the issues lie. And this, I think, also relates to what some of the speakers said here before. So often, especially in this day and age, where fintech companies have a lot of online presence, a lot of customers in the online combined with the offline. These organizations have a lot of data, whether it's digital banks, payment providers, exchanges, trading companies. There's a lot of data, and this data is critical. I think everybody can agree that data is key. These organizations want to use data for customer experience, for customer engagement, for automation, for personalization, for support automation, for sales automation, all the different aspects of the business. The problem is that the data is distributed, not easily accessible, and it's hard. So what do? They work for years and spend millions and millions of dollars on building complex data projects that will enable them to use the data. But what they end up with is a very different solution that doesn't answer their needs in real time. It's a never-ending project. It requires constant development, and it just doesn't answer the needs that they set out to solve. What Solitics does is it comes in, it easily integrates into all the different data sources that these organizations have. It integrates into all the various communication channels that they use, and it gives them the ability to use the data for automation, for personalization, for customer engagement, for customer experience. It enables them to use the data in an easy and smart way in real time and without that long and data project. So we're talking about days and weeks versus years, and at a tenth of the cost. So what we enable to do, what we enable these companies to do is have that one system, centralized data that they can use to engage your customers on a one-on-one level versus just a generic and sort of like treat everybody the same. So in a nutshell, that's the initial value we bring.
Thank you very much, Harel. And maybe we'll go to Omer with the next question about the human factor. Omer, your company recruits people in the US and mainly salespeople. You know, as an agency that is specializing in recruiting salespeople, how do you see the human factor influence on these aspects and on the successful client engagement to new clients? Omer, with us? Okay, I guess Omer has technical issues here, so we'll move to the next question and talk about the human factor in a second. So Gil, I'll bring it back to you. It will be interesting to hear your take on how you improve the end client satisfaction and how you improve the client engagement to these clients.
Okay, so again, it was a great year for us. We're serving already over 500 firms. And the thing is that everyone wants to provide, on one hand, better service, but there is a huge demand by employees and also customers to move to the new channels like WhatsApp or WeChat or Signal or Telegram. And we're focused mainly on regulated entities where it's trading, private banking, wealth managements. And in these areas, there is both like the need to be quick and responsive, and there is like both engaging outside of the organization, but there is also engaging with other financial firms. Like if you're trading, sometimes you're generating liquidity in the market, you're working with other banks or other big firms. And today we see that the move to the modern channels that in many cases are the same ones that are used in the consumer world, like WhatsApp and WeChat, is probably going to be the thing that will overall win the market because it makes like employees more efficient. They can work from home, they can work from the office, they can use their mobile, they can use their desktop. The availability to share information in like images, documents, files is increasing. The ability to share it with groups is increasing, and the ability to conduct conversation in parallel with several people is simply making it more efficient. And the main challenge was really to make it also compliant. And today we can say that we can onboard like firms in, like we tell them a week, but in many cases we can onboard like even a financial firm with all the integration in 24 hours from the order. So it allows really bankers to be able to engage customers in the way that you talk to your friends and family, like from mobile with WhatsApp or WeChat or Telegram, or by making regular calls and SMSs with them, and all under regulation, where all the information flows into the compliance and surveillance platforms of the bank.
Thank you, Gil. Definitely interesting take. And if we're talking about client engagement, maybe Shlomi, maybe we'll get back to you with that. and on client acquisition. Maybe it will be interesting to focus on fintech companies. How do you see the client acquisition processes with fintech companies before the purchase?
So I think I'd like to build on what Harel just mentioned before, because just as a reminder, our goal as a company trying to get new users is to get the right users. I mean, in most of the cases, we're talking about the users with the higher LTV. This is what most of the companies are looking for. So what we see is actually fintech companies that extending the acquisition funnel, which is in a way counterintuitive, because usually you would try to shorten it and make it as quick as possible. So no, just extend it a bit. And the reason that you do that is because you would like to gather more data on the users. Now, obviously, you cannot just exceed by adding a lot of questions. So you need to find interesting ways to engage the client and make them willingly, first, test drive your product, and second, provide information about themselves. Now, what those fintech companies are doing, I mentioned before, predictive LTV models. Usually, I mean, sometimes they do it alone, but usually they do it with a third party, additional company that, like Harel mentioned, complements this data with a lot of additional data. And then they utilize this data that they gather from the funnel as well as the internal and external data in order to first identify the customers they want and then target them. So some examples, some companies provide, I mean, I think this is the most common, provide an upfront live demo or live test drive of the product or the service before you register, so you can test it. Some companies, this is quite common as well, provide a calculator that you can see how much it will cost you to send X amount of dollars to another country, or how much fees you will save by using this service. A very popular tactic that Chime used when they first entered the US markets, and providing education materials. Again, we're talking about finance, a lot of room for education. Any additional value that you can provide for free, like credit score, for example, Credit Karma. And actually, there are a lot more. This is definitely an area that we always see new innovative ideas, and something that I believe each company in the fintech area should explore much further.
Definitely. Thanks, Shlomi. Thanks for that. And you mentioned also Harel and the fact that they're relying on real-time data. And Harel, it's a good time to ask you, with your platform in Solitics and using real-time data, how do you help your clients to improve their conversion rates and their end clients' conversion rates? How do you do that?
I think it's sort of what Shlomi said. It's sort of a natural process to continue after what Shlomi's company does. It's giving them the right experience, using the right data at the right time to create that one-on-one most relevant contextual experience. I love the saying, the right tool for the right job. We give them a canvas with some of the most advanced tools like customer journey builders, the ability to create very, very specific and personalized segmentation, the ability to manage campaigns on a one-on-one level, and decision-making abilities on the fly in real time that are data-driven based on their data. So we give them canvas with those tools that sits on the bed of data. And by doing so, we enable them to address the user at the right time, at the right place, whether it's for the conversion funnel, whether it's for the retention, whether it's for the ongoing retention, customer satisfaction, whether it's churn prevention or reactivation. We can actually dive into a few examples here. So let's take, looking at the past year, we've seen some incredible engagements done by various fintech companies that we work with. If we look at banks, for example, digital banks, you have a customer that comes in to look at a certain loan offer or a mortgage, and doesn't engage with it, and doesn't continue, leaves, right? So we've seen how they can send them a relevant message by email it literally is tailored to that customer that looked at that offer with the relevant numbers and information. And if he does engage with that and comes back into the app or to the website, and after 2 minutes or 4 minutes still doesn't perform an action that you want him to perform, like sign up or ask for a call, they raise pop-ups with with educational materials or additional offers, or even just or even an offer to connect them with an agent to help them out. That's on that's something I know that even from my personal experience, with my bank, I'm not going to say who, but with my bank, I'm getting sometimes these loan offers. They're just not connected to reality.
Yeah.
I don't even understand why I'm getting the loan offer.
We see that quite often. And I fully agree that the multi-channel approach is super effective and efficient to convert the client. Yeah.
Absolutely. You have to be, it's the multi-channel approach, and it's the right content that's relevant to that person, context to who he is, what he does, his data, his historical data. We see the same thing we've seen over the past year. For the trading world, the financial trading world, the past year has been incredible. The amount of activity has grown so much on the online channel, digital and online. What we saw that the companies that we saw the sort of the before and after they worked with us, and when they started working with us and they were able to send very targeted content to traders, for example, we saw increases in engagement and the levels of trading that were tens and tens of % per month.
Harel, talking about that and the multi-channel approach, it will be interesting also, Gil, to hear your take about it. According to what you see in the market, what are the most desirable and what's the favorite communication channel for end clients in the financial industry? How do you see that? Is it WhatsApp in most of the world?
Yeah. So first of all, it depends on geography. So if you go to like the US market, most of the people are still communicating over SMS and voice. If you look at what the employees or what the end customers want to use, it's definitely the more modern channels that they do in their daily life, like WhatsApp, WeChat, Telegram, Signal. And I think all the financial firms, they have now an approach of omni-channel or a multi-channel. But in many cases, this approach is affecting the contact center. And it's very different between like enabling an omni-channel for your contact center versus allowing every individual employee to use like WhatsApp or WeChat, his mobile device, to really engage customers. And especially in a regulated market, it's slightly different challenges. We do see it happening. So I think the good thing for us as consumers is that in 2 years from now, we will all probably be like chatting with our bankers or internally even in more modern chat or WhatsApp or
maybe in Facebook Messenger. I don't know. Things are moving to Facebook Messenger as well.
But they still have like other channels sometimes or tools for internal communication. But what's interesting is that also consumers, there are things that are not really moving to these new channels, or at least not yet. So there are a lot of things that consumers still prefer to do over a phone. So, and we still see that the dominant channel for vocal conversations is the traditional telephony. It's not the WhatsApp calls or other, like, let's call it voice over IP of over-the-top applications. It's more the traditional telephony. So I think there is still a way for companies like Facebook and others to migrate us also to have the voice over these channels. But I think the good thing is that definitely this year we passed like something that might have taken us a few years.
Definitely.
And it's clear that all these financial firms are going to deploy and allow communication over things like WhatsApp, WeChat, etc.
Thanks, Gil. Thanks for that. And gentlemen, before we wrap it up, a really quick sentence, maybe from all of you around the table. What do you think that fintech companies can do to improve their client engagement? Real quick in one sentence. Maybe Shlomi, we'll start with you.
Well, I'm risking by, I am speaking from a position, but I agree with everything that was said before. I think the communication should switch to more, let's call it the methods that users are using on their day-to-day life. So I'm a big advocate of messaging apps, Messenger, or WhatsApp, or iMessage, and so on. So I think this is probably the most important shift.
Thank you. Harel, same question.
I think that smart communication that's data-driven. Be where your customers are. Combine it all together. It will save you as a company. It will make you smarter. It will make your customers happier. It will save you resources, by the way, in the long run, and it will just create a much more seamless, data-driven, right approach towards your customers, which will end up with, you will see at the bottom.
Definitely leveraging data. Thanks for that, Harel. And Gil, let's
I think,
from you.
yeah, I think they know, everyone knows where they want to get to, but it's more challenging when you're working in a huge firm with a lot of regulations and demands and dozens of IT platforms. So I think they need to find the right approach to do quick, short wins, and to find the right fintech companies that can allow them to make an impact on customer engagement without investing or getting into too lengthy and complicated projects.
Mm-hmm. Indeed. Gentlemen, thank you very much for being with me and for educating our audience, sharing your 2 cents. Shlomo from Facebook, Gil from Telemessage, Harel from Solitics. Thank you very much. Stay tuned for our next panel discussion with Refinitiv on the next session. Thanks very much, gentlemen.